All right, traders, it is time to get started. I've gotten a sound check out of the way. I will assume you can see my screen. Today is a very short webinar on the triple focus indicator and how to use it to locate intraday divergences. That's all we're going to focus on today. It's really simple technique to use using our tool. And that's why it's going to be a very, very short video today. So let's go ahead and dive in. Here's a disclaimer. Of course, I am not a financial advisor, and you should suspect everything that I say, confirm, deny it, conduct your own studies. This is for educational purposes only. All right, with that being said, let's go ahead and get into now. Just a second here. Yes, there we go. I don't know why I wouldn't do it on that chart up there. Okay, let's go ahead and get rid of the trades that we took this morning. All right, so what we have here is a tool that we call the triple focus. 2.5, 3 years ago, I wanted to build a tool where I could gauge the distance on the NQ or measure the distance when the NQ got too far away from the 216 period EMA. That's all this is. It just measures that distance. But I also have it smoothed, um, a smoothing factor on here so that it's not so jagged and it conforms a lot better. Um, so the triple focus again is a smoothing effect of the difference between the current closing price and the 216 EMA. Now, what I wanted to do was once I built that was I wanted to put thresholds on the upper and lower bounds of the indicator. So that's what you see for the NASDAQ. It's, 60 and -60. And that was a lot of research, chart study. Um, there's nothing magical about this number. This is just the threshold that I like in the NASDAQ market. And I haven't changed it in, almost 3 years, two plus years. So when I turned it over to Richard, of course, I had this built in Markers Plus. When I turned it over to Richard, Richard was able to code in all kinds of neat features inside the indicator, such as we have selectable options in here that you can color the lines different manners. I prefer to see, what I like to see is we have a boundary in here that I also have set just for the NASDAQ above and below the zero line. And so I can see green when it probes above. When it comes back inside, it turns yellow. And, until it turns red, this is just a bullish trend. No matter how much this thing flops around, it's just a bullish trend in here. Then we dive down. This was just a big liquidity break here, a V-shaped liquidity break. We went back, green speck there, pull back, and then of course, that's so there's multiple use cases for the triple focus. I'm kind of explaining the indicator as a whole right now, but when we get to the end of this, I'm only going to focus on one thing. That's why it's called triple focus. It has at least three different use cases. We're only going to talk about one today, but it's important for you to understand how the indicator is designed, that I've used in multiple instances here. So if you can understand that here we have a bearish trend, lots of big pullbacks, but it never goes green. So this is just all one big bearish leg. Same here, bullish, lots of pullbacks, but the bullish trend ends over here. So that is one use case that you can build a trade plan out of that we're not going to talk about today. So another use case is the divergence trade. Now, I don't like every divergence that pops up. That's not what I like. I like divergences from extremes. And that's why I built this indicator in the first place. I wanted to know mathematically when the NASDAQ was at an extreme relative to the 216 EMA. So Richard coded this so that when it's above the extremes, it turns white. It's below, turns white. Yeah, I took this trade last night in an eval, a divergence trade, and yeah, we had a nice little run on that one. So those are the extremes. Now, what do you do with those extremes? Well, the first thing is you need to understand what we're looking for. So I'm just going to go back here in the overnight session, and I'm going to mark this thing up. No, there aren't automated trend lines on this. So, I'm not going to put automated trend lines on this either, simply because I personally like to stay engaged with the market, and I like seeing how these things unfold. But I'm going to show you really, really neat function for divergence trades. And again, number one, we're only going to look for a divergence trade out of an extreme, either a low or a high. And then I personally only want to look for that first A plus setup out of that extreme. That's how I trade it. You may go a few days without getting a divergence trade. You may go some days where I think we had like 3 or 4 the other day, divergence trades where the NASDAQ was just ranging from one extreme to the other. And it was just giving all of these great A plus setups. So let's take a look at a couple. And really, I only have to show you, like, this is the overnight section. So I'm not cherry picking, you know, the the absolute best trades. I'm just showing you what happened in the overnight session last night. So let's take a look at it. This is how I do it. I mean, I essentially eyeball it, and I use trend lines to draw this out to illustrate everything for, our community. All right, so let's take a look at this low right here, and I'll show you how I actually traded this last night. So the minute we get a white indication of an extreme, that's where the clock starts. Oh, what is that, F7? Let's get rid of that. All right, so you can see here, I'm not going to put the trend line down here either. This is where the clock starts. Now, what we're looking for is we're looking for a lower price and a higher. Yeah, everybody in this room knows what the divergence looks like, but this is just where the clock starts. Now, we get lower price action here, but we also get a lower indicator read. So that moves the clock over. So now this is our starting point. We get a rally, we come down. Now we have a lower price, and we haven't made a lower low yet in the indicator. I mean, this is so close. It's actually math that gives you the divergence. So here we have the lower price and the equal or slightly higher low in the indicator. So what I did was I was in an eval, and I took this first trade right here. Now I'm going to collapse this to show you what the trade setups in the A plus looks like. But I took this trade setup right there. And actually, it was a very nice trade. I ended up coming out on that pullback right there. But that's the trade setup from the low. All right, now let's take a look at a high. And once I get these marked out, I'll switch to a 36.6 chart with our setups on it. Now, this chart here I'm using, it's a 36.6 Ninja but I just have the time compression as much as I can go. I don't want to see any, for me, I don't want to see any granularity. All I want to see is close to a line chart as I can get. So I really like the symmetry of the Ninja and a line chart whenever I do this kind of analysis. Now let's look at a top. All right, so we have a white here. So clock starts there. Now what are we looking for? We're looking for a higher price. We get one here, but we don't get a setup. We get a higher price there and a lower indicator read. So let's take a look at this, mark that out. And again, you don't really have to have trend lines. I don't use the trend lines. I use them to illustrate what I'm looking at. But in my own personal trading, I don't put trend lines on these things. I'm watching it unfold. And then we should get you'll see that that's probably a reverse mullet right there to the downside. That's the first setup right there. Okay, so let's mark these off right here so we can go back to them. So that first short trade. Now let's take a look over here. There were some really nice trades in the overnight session using the divergence. Clock starts there. First probe above. We get higher price. We get lower indicator read. We get first setup right there. Here's another one. We'd have to look to see if this is a reverse mullet or a puncture trade. But you can see, I mean, they're really easy. It's not a complex calculation. Let's go lower. Oh, goodness, come on. There's our divergence, and this is possibly our first trade. I mean, look at all these divergence trades that happened in the overnight session. Clock started again here. This setup's over. Once we get the first setup, it's over. Now, before I mark out the final one here, what aborts these trades? Well, if you get a puncture, let me see if I can find one that's aborted. Yeah, so we don't look for a bearish setup here because it goes from overbought extreme to oversold extreme. So that's what aborts the bearish trade look. Now we're looking here and then here for a bullish trade setup. So it just repeats over and over again. But here's one more. Let's mark this out in the overnight session. Your first trade setup is probably going to be this bearish setup right there. None of these others were, I don't think were triggered. So we're going to take a look at them and see. All right, let's close this up. Let's move this over. Go back. All right, so here was the trade I took last night. It ended up being a reverse mullet. I missed. I would have entered right here. And normally when I'm trading these, I have really wide stops. So just understand that I have extremely wide stops. That was the New York Stock Exchange tick index giving me a call, letting me know that the ticks are going crazy. We just had a massive push up in the market here. Goodness gracious. All right. So, okay, we got it. Market's going berserk right now. We probably declared peace again for the 160th time. All right, so right there is, if I had entered this, my stop would have been below this low right here. I have really wide stops when I trade, but I missed the first entry and got in on the reverse mullet, and we rode this one up, and I came back out on this little puncture, this little pullback there. So that was the first entry. Now here we go to the second one. Let's go over here and see what that again, reverse mullet right there to the downside. So we're just waiting for one of our named setups. Another one here, and that again, it's not a reverse mullet. Uh, it misses the reverse mullet trade by a couple of bars. So I can't tell you if I would have gotten in on that or not. But we would have had opportunity over here in this section to get in, participate in this. So I can't tell you that I would have gotten in on this trade or not. You know, I'll just say that was the first pullback. So that one was questionable. Here was another, and lo and behold, it was a reverse mullet. Nice clean trade to the downside. Here we go. And again, that happens to be a jiggle right there. So first trade setup is the jiggle after the divergence. So that is all this use case number one for the triple focus is the divergence trade. And it's divergence trades from the extremes. I don't care about all the other little divergence setups that occur throughout I am not interested in those. I'm only interested in the divergences from the extremes. So that's how I use it. And that's it. So let's see here if you have any questions. Rusty, it would be awesome to have Richard code this to do what you just did, showing setups and divergences. I don't know if he can. He's he has already told me that's potentially beyond his scope. So, but I mean, still, I mean, I just trade it manually, so I don't really, for me personally, I don't need. Maybe that would help somebody else. I'm not sure, but yeah, he's already said that might be beyond his scope. So, I mean, the way this thing is set up now, from a manual perspective, it's pretty sweet. Pretty sweet indeed. All right, so let's see here. Yeah, we're about 20 minutes in. So I'm going to conclude it right here. If you have any questions, just Oh, hey, Sherry. Yeah, let me go back. Let me go back. So the triple focus, 1, 2, 16, and 9. That's the properties. Now I have this, I've done research on other markets and have these custom threshold levels for these other markets here that work. But the NQ is preset. My custom centerline region and opacity, those are set right there. So this custom center region, that's the percentages above and below the center line. And that's about it. That's all you need for the triple focus there. So yeah, just update, and I dropped a new PDF in the PDF archive a couple of days ago as well. So all right, so let's go ahead and if you are new to the room, if you don't know anything about us, I'm not sure if we have anybody in the webinar, but here you go. You can use this code. Right now, we're still at $29.99. You can come in, stay 1 month, pirate us for everything that we have, and part as friends after that month. Cancel anytime. Coming soon, once the flagship model releases, we're going up on the monthly subscription to $35.99. I'll run probably a 2 week special where you get everything for the new subscription price. But then after that, all of our trading models and indicators, they're actually going to be more than that. I'm sorry about that. It's actually going to be $89.99, but I'll run a discount initially. Let me go back to that. Yeah, I'll run a discount initially to get it to that $79.99 level. Then we're going to be offering a 7-day trial to the trading room. So anyway, that's what's coming up. This is how you can get in touch with us. Oh, I need to check that. Hey, listen, thanks for taking time to join us for today. And just drop me a line if you need any help with anything. Triple Focus it's a really good tool. And like I said, it has multiple use cases. So the divergence is super easy to use, simple, it's clean. Once it sets up, then we just wait for an A plus name to set up to kick right after that. That's where I want to take my shots. Hey, good luck in your trading. This recording will be available later on this evening for those that maybe want to watch it again. So have a good one. Hope to see you in the room.